Welcome to the Techno Fundamental Report for December the 4th. Growth stocks. Let's talk about growth stocks. These are companies that are expected to grow sales and earnings at a faster rate than the market average. The growth stocks are going to determine the market. I'm just convinced that without the growth stocks, you're just not going to have a robust environment for stocks. So we want to see the growth stocks get going. They've been underperforming here since the beginning of the fourth quarter. Now the trade-off with growth stocks is that they're volatile. Growth stocks tend to be 2 to 3 times more volatile than the overall market. So you have to put up with volatility in order to handle a growth stock portfolio. So what that means is portfolio management, meaning risk management. You've got to keep an eye on your stop losses and make sure that the stocks that you're investing in are really acting promising. So I've come up with some indicators here to help us understand where the growth stocks are at this time. So what I have here is a ratio where I'm taking the NASDAQ, which is growth stocks, and I'm dividing it by the Invesco S&P 500 low volatility ETF. So I'm taking growth stocks versus low volatility, say, value stocks. So you can see here that the growth stocks pretty much peaked around the end of October, beginning of November. Since the fourth quarter has started, growth stocks have been somewhat underperforming. So you can see here with this particular ratio that we had a pretty severe sell-off. We've kind of got a V bottom going here. So this is an area that says the growth stocks just aren't really moving yet. So let's look at another ratio. Now this is our aggression index. This is where we're taking the NASDAQ divided by the consumer staples stocks. You can see the same dilemma here. Everything pretty much peaked around the end of October, has been somewhat in a short-term downtrend, forming somewhat of a V bottom. What we want to see here is this particular ratio really break out above these moving averages and this lower moving average continue to turn up. So the growth stocks don't look terrible, but they are underperforming. So a particular ETF that is very growth stock oriented is the ARK Innovation Fund. So this would be what we've got here is we're going to have 5 particular instruments to look at here. So with the ARK Innovation Fund, it really peaked around early October, came down, formed that V bottom, is coming up and just now getting above that 25-day moving average. And that moving average needs to turn up. So the ARK fund is really not showing any massive breakout, but is improving. Here's the Innovator IBD 50 fund. This is Investors Business Daily. It's a fund of 50 growth stocks. You can see here, again, these stocks pretty much peaked middle of October, coming down, underperforming. You can see here trying to rally, but pretty weak, not even getting up to that 25-day moving average. So growth stocks are underperforming. They're having a tough time. Here's the fund called the MSCI USA Momentum Factor ETF. Same scenario here. Pretty much peaked around late October. Came down just like all these other growth-oriented indexes. Kind of a weak bounce, but trying to get back above that 25-day and hopefully above the 50 days. So in summary, these particular stocks are they're related to the growth stock group and are just not acting as well as we would like. So let's just take a look at a couple of growth stocks just to see what the overall picture does look like. So here we have Amazon. Amazon really broke out nicely towards the end of October, peaked, came down just like all the growth stocks, came down, held the 200-day moving average, and is trying to get somewhat of a bounce. But the pattern is not as positive as I would like. Now, Google is another story. Now, with Google, you've got this breakout in early September, very steady, regular performance here. We have a real nice, tight pattern. Then we got another up move going here. And you can see here with Google, it's really outperforming the group. So Google looks pretty darn positive. Now here's Meta, but this is another example of a growth stock that is somewhat breaking down. You can see that Meta really pretty much peaked in August, made a lower high in September, then another lower high in October, broke down, came down, made a low below the 200-day moving average. This stock just doesn't look very good technically. Now let's just take a quick look at interest rates. They continue to be in a downtrend. You can see here with the power index, we're showing that interest rates have dropped 9% over the last 125 trading days, and this is the yield on the 5-year Treasury. So interest rates are fine. We don't have a problem there. The overall trend is positive. Both the NASDAQ and the S&P are above their 200-day moving average in somewhat of a positive uptrend. So other than growth stocks, the overall market does look somewhat positive. So we'll continue to monitor that. Now on the VIX, which is the volatility index, we're getting back down here into a reasonable area after having a major spike up in volatility. We're starting to see somewhat of a normalization there. Now on oil, we're continuing to see oil in a downtrend, which tends to be an indication of inflation. So with oil going down like this, we really don't think inflation is going to be a big issue. Now oil recently made a low at 57.50, currently trading around 58.64. Now one other encouraging factor is on the New York Stock Exchange, the new lows have started to settle down. We got into a period here, roughly a week ago during the month where new lows got up to 170, 160, which is above 40. Anything above 40 is troubling. But you can see now that for the last 1, 2, 3, 4, 5, 6 trading days, we have been below 40 new lows a day, so that is somewhat of a positive. So it's somewhat of a mixed bag. We're seeing underperformance in the growth stocks, which tells me that this market is going to continue to have problems, but let's just hope that they start to firm up and we get some type of improvement in the growth stock area. But for now, just continue to stay cautious. We would have, cash on the sidelines, and we would not be super aggressive here until we start to see improvement in the growth stocks. If you have any questions, please let me know.